Good afternoon, guys. This is 7th of March, and today we are making a little bit different system with the live stream. We're going to check out the fundamental first and then take a look on the technical charts. And the reason why we do that, because there were a lot of requests from the pro members for technical charts. So I want to make sure that you're going to get all the information. So therefore, we're avoiding today a little bit the education part of the fundamental side. And we're focusing on the facts clearly and trying to explain what is going on in the market. There are very interesting developments, by the way. And as I highlighted in the previous live stream and last week as well, there's a lot to watch on the macroeconomic field. So just follow our website and our macroeconomic calendar and also the explanations. As you know, there are analyzing videos as well about the macroeconomic data. So you better watch that because very important things are going. And also I would like to recommend the weekend video, which will be the Hungarian one. And that will explain a lot of things why we're afraid a little bit about March, especially March, 11th of March. So starting with the ETF market, as you can see, there is an interesting development in there. Because there is no change in the macroeconomic field, the point is staying very low at minus 14. And if you're asking why, what the reason is because currently what we're experiencing from the United States is a declining US ISM services PMI from 53.4 to 52.6. But as you can see on the chart, it's still remaining in consolidation in positive territory. So I wouldn't say the sector is expanding very aggressively, but trying to keep itself on a healthy way. But at the same time, we got the US ADP non-farm employment change. And yes, highlight, this is why we're going to see Friday, the non-farm payroll. So this number is increased. Firstly, it has been revised from 107K to 111K. And then the new data come 140K. This is a clear increase. Not a big increase, however, if you take a look on the chart, as you can see, this is a very, very small jump. From the economic perspective, it doesn't change anything, by the way, but from the trader's perspective, yes, this is a kind of positive effect. But we have so much bad news that technically it doesn't really it doesn't have a positive effect on the market overall. And we had the US job openings, which has been revised from 9.03 million to 8.89 million. And the new number is 8.86 million. This is somehow correlates with the expectations. And at the same time, it's correlating with my expectation as well that we are getting to reach to the border of this bear trend of the data, which is declining for long term, and therefore I'm expecting the next data declining, and probably the next 2 to 3 data will decline indeed. So we might see some consistent negative pressure from this data month by month, which is not good because it's adding to the all of the negative data we'll be experiencing on the market right now. So this is why it's a fairly neutral effect on the ETF market for a very short time period, but overall it is on minus 14 and we are very negative indeed. There is no change in the geopolitics. As you can see, it's currently on minus 9 point, but I would like to highlight that there is a high possibility that we will see a point decline in the upcoming 2 weeks. The tension around the Red Sea and the tension between NATO and Russia is increasing, and therefore there's a high probability that the minus 9 point maybe the next week or after will be minus 10. So we need to be ready for that because the market is very eager for the information and therefore very sensitive for any changes in the geopolitical field. There's no changes in the corporate earnings point. It's staying on minus 7 points, so pretty consistent but negative. And here are the interesting part. The market news and events is changing from 0 to minus 2 points. And the reason for this changing is very easy, clear. And the communication showed us in the last few days why it's happening. As you can see, the ETF index in the stock market is really concerned about the current bubble, especially because we see on the Magnificent Seven that they are weakening, and that somehow making investors and traders nervous in the last few days. And also there is a possibility of longer high rates. This is something really concerning the market, because there was a misconception about rate cuts, very early rate cuts. And we see now that unless we have some really tragic event on the market or around, we are not going to experience any rate cuts anytime soon. So therefore, the market is preparing to be very disappointed. And this is the reason why we see such a negativity in the last few days. So this is the reason why we got the point dropping down to -2. I'm not saying this is a drastic drop, but we haven't seen this point since 4 meetings. And I'm really wondering whether it's going to accelerate to the downside or not. In the same time, market sentiment and psychology is dropping back to zero now. That it's more drastic than it was previously. 6-point decline is big, and that currently it is neutral. It's very strongly signaling that something is not right on the ETF market. Now the reason why is because the market is mainly focusing on the main indexes such as S&P 500, Nasdaq, US 30, the Russell, the UK 100, and I can go on and on. So those are the big ones, and everybody is just talking about that. And when there is something negativity happening on the market is usually reacting on a negative way on other sides as well. But this time, we experienced the low cap stocks are gaining some, even the ones in the bear trend. And therefore, it's somehow counterbalancing the negativity coming from the main indexes. And we got a totally neutral effect on the overall market. Now, if we take that individually, of course, we will experience some differences, but sometimes major differences. But if we take the overall market, that's completely neutral right now. And if we take a look on the technical side, as we can see, we are dropping points from +2 to 0 point, which is very important. And let me just show you what the real reason for that drop. The reason is for the drop is if we take a look on one of the major, or if not the major index, which is the S&P 500, we see some drop back with gaps. And despite that we filled the gap yesterday, there wasn't any attempt to go any higher level. And if we just focusing on the overall picture in the last couple of months, there is no imminent danger for the market right now. But as you can see, we are at the top of my secondary prediction of hitting some kind of high. Now, that doesn't mean that the market cannot go any higher, but it definitely means that there was an event on the market when the market was a little bit uncertain for 2 days. And it really will depend on how the macroeconomic data and further communication from Jeremy Powell at the Senate will develop. And so the market is waiting right now, and the market is definitely very nervous. So the overall technical setup on the S&P 500 is technically neutral if we take that picture right now. But if we take a look around the options market, as we can see, the VIX is somehow starting to get a little bit higher, and the SPY options trading is also aiming to get a little bit higher, which is expected to come higher. And if it exceeds this blue line, that means that the put contract will be outbalancing the call contract, and that of course could bring some negativity. And the SPX is behaving fairly neutral, fairly natural. But at the same time, let me highlight again that we have a problem with this 0-day options contract, where we don't see really what they're doing. What we do know that they have a huge power, and so we're not going to see on the wicks if something is happening with the 0-day contracts, but they could be a very strong trigger. So anytime we see a positive environment in the options trading, and then suddenly it changes to neutral, we need to suggest that something is going on in the background, even if we are not right with this idea, because we need to be prepared, we need to be ready. We know exactly that the majority of the main indexes are in a huge bubble and they are ready to pop. The question is when, not the if, and therefore we need to be prepared to get out in time. And this is why I am kind of highlighting these events and these possibilities. So it's technically setting up the points to the technical points to -2. Also, now I was just talking about the S&P 500, but of course we take into account the whole ETF and index market. And if we're going to take a look on the technical setups anyway, but if you just take a look, you see exactly that there is a high possibility that further decline in the next 2 to 3 days is highly possible right now. Only from the technical perspective, of course, it's not necessarily going to get through. It depends on everything else, especially the main 6 drivers of the market, as you can see on my screen. It's mainly, sometimes driving the market independently. Now, the interesting fact is that with the point backdrop from the news, the market sentiment and the technicals made the overall point a very interesting move, is dropping from -22 to -32. And we are kind of within the consolidation still, so it leaves the door open to a second, or not the second, another wave to the upside with any kind of momentum we can gather on the market. But at the same time, it's getting on the lower section of the consolidation very, very closely, very dangerous move from the overall point. Now, just to make it sure that you understand the overall point, this overall point is not predicting what, for example, the Nasdaq will do. It's going to go to the highs or going to go for the lows, but rather this is a overall volume indicator which take into account all the 6 major drivers and the points we are identifying for them, and therefore we have a very nice picture of a very clear volume of what really drives the market. And this is very important because we see the main momentum. We see that this momentum is actually declining and aiming for a negative setup. And once we exceed the low side, which is probably the -33 point is the most accurate low point what we can get from this consolidation, then we have a kind of confirmation that there are way more sellers on the market and expected to be in the upcoming days than buyers. And this is a very important information. Now, let me just highlight for a second that the main indexes, such as I mentioned, S&P 500, Nasdaq, US 30, etc., they are in technical bull trend, but not fundamental bull trend. And therefore, I know it sometimes sounds stupid, but I need to interpret this information as we are in a bear trend rally right now. So despite the all-time highs, I know it sounds stupid, but this is a bear trend rally. And therefore, we need to be ready if any kind of crash-like moment is coming, it probably will be big. So again, I'm not talking against the upside movement, because when it's going to the upside, of course, we have to trade to the upside, but we need to be ready. We need to be very, very cautious on the market, and it could happen. We're just waiting for the trigger point, and that is all. Now, the market, the general ETF and index market is consolidating or either in bear trend, but at the same time, they're doing some kind of pullback to the upside, which considered as a trend, a counter trend correction to the upside. And also we need to be very careful, because probably, or most probably in most cases, this is not the beginning of a bull trend on those charts, but definitely some positivity coming up there. Now, the direction status on both of the category is pretty unstable, as I mentioned, because the sentiment on the market is drastically weakening. And if we take a look, there is no supportive market drivers right now for any kind of bull trend in terms of the main indexes, not for the overall market. Let me highlight that. And the reason why, because the sentiment is actually coming back to completely neutral. So we can be a little bit concerned about this sentiment drop on the market. This is the main risk of the market right now. If the sentiment changes, then the market direction will definitely change. Now, the sentiment is based on narratives. The clever part of the market with the big money and with the clever money is, of course, focusing on the overall pictures with the 6 main drivers, what I was highlighting so far. But at the same time, there are lots of money with lots of people that they're not, very trading in a clever way, and therefore they're focusing on just one or complete misconceptions, and this has to be considered. And those people are usually driven by narratives from market news and events. So if you see that this point is going to drop in the upcoming days, then probably we will see furthermore decline in the market sentiment. This could be a trigger. Now, what kind of news can be the trigger? It could come from some macroeconomic side. It could come from the disappointment of the rate cut decision. It could come from many places, especially from bank sectors if something is going down. And if we see some signs that the bubble is actually bursting, we need to be ready for getting out, even with the long-term positions. Now, that's for the indexes, and let's see the commodity markets quickly. As you can see, there is a point drop back from the macroeconomics, and this is not because of this kind of neutral week of macroeconomics, but I mentioned in the previous weeks that we are technically aiming to the downside with this point a little bit, and because we got the neutral week and not a positive week in terms of the commodity market, we definitely had to get this point back, and from 14 points we are declining to 13 points. There's no major escalation for negative direction, but an after effect of previous few negative effects. No changes in geopolitics, but as I mentioned, it could be. And so we are remaining in a positive 19 points. And let's see how the situation is escalating on the Red Sea, especially in the Red Sea and Ukraine. And these are very, very important cluster points for the commodities, and especially for the deliveries of the commodities. And therefore, we're really watching closely the situation. The market news and event is going up from 4 points to 6 points, and that's a pretty decent increase. And let me just show you quickly why this increase happening. So in terms of the commodities, the disappointment that there is no rate cut is actually very positive for the energy market. Meanwhile, we just got confirmation by the OPEC that there will be further oil supply cut, probably extending to June to July, and therefore it is a kind of positive news for the energy market, while the metal market is still very stable, especially with the precious metals, and the food market is very stable as well. But some of the essential foods are pretty much negative, but we got the news on the positive side. Anyhow, so this is the reason why we increasing the points from 4 to 6, and the market sentiment is following this change on a very good way. So increase the points from 9 to 10 points in positive. And if we take a look on the technical side, the technical setups on the major charts are actually from increasing from 2 points to 3 points. So positive overall pictures. And in terms of the market sentiment, it is very interesting. Let me just show you what is going on exactly with the commodity markets. So the essential foods are recovering from last week's decline a little bit in terms of the sentiment, but the non-essential foods are declining back to a positive, neutral to positive territory, which was expected if the essential foods is coming back up a little bit. But it's still not healthy environment. The energy sector is fairly unchanged at the border of neutral to being positive, but the precious metals are very aggressive to the upside. Now, if the precious metals are aggressive to the upside, it's obviously not a very good indicator for the stock market. But anyway, industrial metals are following the precious metals right now, but I was highlighting this situation. If we see that the precious metals are going up, but there is no fundamental reason why industrial metals would go up, then we need to be very careful and rather expecting a short-term movement and not a long-term movement on those industrial metals. The livestock is unfortunately declining back to almost to the neutral territory, so we need to be very careful. That might be requiring some profit taking from us. We will keep an eye on that field definitely. So this is the reason why we got a little bit positive effect for the market sentiment, and it's improving compared to the previous meeting. Now the overall point, however, doesn't really change. So as we see, there is a remaining 51 point in positive, which is very, very nice, and it's still, you know, on a high level. But at the same time, it is possible that there will be some kind of profit taking, especially when you take a look at a gold chart, as we see that very aggressive to the upside. So it would be very bold to expect that the gold will reach the next target within one single structure, even on lower time frames, because on the daily time frame we see only green candles. So there, I'm very certain that we're going to see some kind of profit taking, and therefore the overall point might dropping back a little bit. Need to be ready for that. But in overall, everything is fine, and the main risk on the commodity market is profit taking. And of course, for industrial commodities, the slow global economy will be the reason why we will experience most probably that at the first time precious metals are making some kind of correction to the downside, industrial metals will do a correction, a way much lower correction on the charts, and this is gonna fall back all the way back down to very negative territory. So this is the reason for that. Moving forward, Forex market, as you can see, there is no change in the macroeconomic field, mainly because Jeremy Powell is still, you know, going to talk about very important things, but at the same time, we are just ahead of important rate decisions, important CPI numbers, etc., etc. So the market will waiting for this data, and then according to the data, we will see whether we need to change the point or not. So we're remaining a minus 14. That's a very negative point, by the way. There is no change in the geopolitical field. It's minus 1. And of course, we're not watching the corporate earnings for the Forex market. No changes in the market events and news, but there could be, by the way, because one of the bank almost got bankrupt yesterday, and then it got bailed out by the investors. Very comic and very drastic side of the financial markets, and therefore I understand that Jeremy Powell says, of course he has to say that the financial system is resilient, but in reality I'm not saying it's not, but I'm saying we have so much probability to crack this system from one minute to the other that yeah, we need to be careful. But at the same time, don't forget March 11, and that's what I'm going to talk about in the Hungarian weekend video, because it's an important day, and not because we expect that the market will make some sudden movement on that day, on that particular day, but you just heard yesterday this bank, so I explained that to you, that probably before the date there will be banks start to go bankrupt. Now, this bank avoided to go bankrupt because it was starting to begging to investors to give them money, and actually they gave, but you know, this is kind of sounds funny, but anyhow, the market news is staying on minus 3 points, so remaining in a negative territory, and I believe no surprise for that. The market sentiment and psychology, however, is increasing from minus 4 points to minus 1 point. And the main reason, and this is the most important part on the Forex market today, because the main reason for this point increase, is technically the DXY and nothing else. Now, as you can see, the DXY had a pretty decent drop, and that was a very momentumful drop. While the EXY reacted on a positive way, that was kind of expected. The Japanese yen is somehow improving. It was improving its sentiment point, by the way, on Monday as well, and now it's just improving further, but it's still in the very negative territory. the BXY is one of the assets that it can actually go into definitely positive territory alongside with the EXY, but we know exactly the relationship between the DXY and EXY. This could change very suddenly. However, the British pound is able to hold itself a little bit better despite the very negative economic trajectory. The ZXY, the QE, is also improving, but it's, because of the DXY drop back. And the CXY, the Canadian dollar, is improving also, thankfully to silver. However, oil is a little bit counterbalancing this silver positivity, but also the DXY was helping a lot. Surprisingly, the Swiss franc, the SXY, is remaining on a very negative territory. So we need to keep an eye on that currency, because if the DXY is making just one single little correction to the upside, the currency, because it's so weak, probably is going to drop a lot more than you would expect right now. And here is the Australian dollar. It has a really, really, really big fight to get into neutral territory, but right now it is in neutral territory. So as you can see, the only real reason that those currencies are improving, those bank sentiment, is the DXY, because now it's worth to exchange, but that probably only for a very short time period, and of course it will be depending on the US dollar and nothing else. So therefore, we also got a little bit of improvement in the technical points from -5 to -3. Not too bad, but still remaining in negative. So therefore, if you see, I would like just to highlight that, to emphasize that if you see those currencies increasing in prices, don't forget that's still negative, and probably you're only going to see some kind of correction to the upside, and then later on probably continue to go to the downside. We'll see that. That's just that's just my opinion, but there is a very high chance for that, especially because actually we are increasing the overall point right now, which means we are going from -27 to -22. Therefore, we definitely see this correction in the volume as well, which coming from the Wall Street and the banks. It is a very nice improvement in the last couple of meetings, but at the same time, the point is just completely unable to move out from this declining trend yet. It might happen, but in order to being able to get out of this very negative trend for all the currencies except the DXY, is requiring a huge and devastating drop from the DXY, and that's very important. So remember that I was warning you in the last couple of weeks that there is a negative setup on DXY. I didn't change this text, by the way, since that far, because I wanted to show you that we did talk about that probability, and so there was a very negative setup on the DXY. But at the same time, we had a negative setup on other indexes as well. This is the reason why they cannot go to the upside so strongly, despite the very negative DXY. And then I also emphasized that there is a sign of surprise which could come. And here we go, the surprise is here. So technically, all the 5 major drivers of the Forex market is supporting a bear trend which is visible currently. But at the same time, this is why I'm saying that we are seeing a correction to the upside rather than a trend direction movement. Now, the risky sector is still the BXY, because the BXY is strengthening better than any other currencies, and therefore it could cause more surprise if it's turning down, if the DXY is turning to the upside. But the DXY weakness is still ongoing, so that's the main risk on the market right now. By the way, if somebody knows how to use this situation, it's not a risk, this is an opportunity. But for those a little bit clueless, this situation is definitely a risk right now. So moving forward, the stock market is developing very interestingly. Similarly to the ETF market, there is no change of the macroeconomics, remaining very negative at minus 13 points. Geopolitics remaining minus 9, but as I highlighted, there is a high possibility that we need to change that to minus 10. Corporate earnings are very, very negative overall, minus 13 points, but there is no change. But there is change in the market events and news. I already showed you the bubble concern and, of course, the disappointment of the rate, high rate. Disappointment on the rate cut. Of course, the market is trying to digest that there is a higher and higher probability for higher rates for longer. Even if it's possible, the Fed can do that they maybe start cutting rates in the summer, which was my first idea anyway, and I still keep this idea that I don't think it's going to happen before summertime, unless there's something very tragic happening on the market, of course. But if not, then I see possibilities to make some kind of rate cuts, some very mild rate cuts in the summer, and then making rate pause until the end of the year as well. So because the inflation is here, and if the Fed is cutting the rates very aggressively, I think the United States is, it's doomed pretty much. So this is why we're starting to get those news. So the stock market is remaining very negative. In fact, increasing the point from to the downside from -4 to -5 points. Now, interestingly, the market sentiment is reacting positively. Now, the reason why is because, in the last couple of months, or technically almost 1 year, not a full year, but mostly from the end of last summer, the market is focusing on major stocks like the Magnificent Seven, and those stocks really show that they just tired right now. Especially Apple, Google, Microsoft, they are all tired, and the market is starting to realize that something isn't right. So why the TLT is going to the upside again like crazy? Why the gold is actually going upside like crazy? And we see the Magnificent Seven is breaking apart. Tesla is doomed, and so a little bit of money went to the small cap stocks, and the majority of the stock market is small cap stocks. So we started to experience some improvement with the stocks in the bear trend, or close to a bear trend, or within consolidation. They started to go to the upside because some of the traders diversify, they focus on the market, and now they're starting to leave the Magnificent Seven, and before they do or make any bold movement towards a safe haven asset such as bonds or the gold, they probably try to be careful not to leave the stock market just yet, waiting a little bit, and if they got confirmation that we are fine to leave that stock market because it's done, the Wall Street is done, the banks are done, then they probably going to leave as well, which could provide a secondary wave to gold and the TLT. So increasing the sentiment on a positive level, because what we see now decline is about the Magnificent Seven and not about the majority of the stock market. But because the Magnificent Seven is very strong, we also visibly seeing negative setups, and therefore the point from -2 is declining to -3. The reason why, because in many cases in these positive reactions, we are experiencing setups such as bearish flag building to the upside, or bearish wedges building to the upside. So even the small cap stocks are able to continue to go to the downside, but now they are making some kind of correction, and therefore the technical setup is, or the technical point is declining from -2 to -3. The overall point, however, is staying at -42, which suggests that the market is in overall, it's going to stop, it's going to hold. It will be a very nervous market, that's for sure. So we will see upside movement and downside movement, but whatever was very, very positive so far, unless it has its own and really reliable reason why it is positive, probably going to a stop. And whatever was very negative, also probably going to a stop. And we are waiting for any kind of new developments on the market. Now, why is it dangerous? It's dangerous because that means cyclicals will definitely waiting for the moment to go to the downside. So it is not the situation when we have some mood on the market into one direction or two different or a couple of different directions in markets, in different market sectors, but rather the market is ready to stop right now. And if we get a trigger into a situation, in an environment like this, this could be more dangerous than just getting a bad news out of nothing, and the market may be reacting a little bit, then continues to go to the direction where it was started. So a very risky environment on the stock market right now, and I would highlight that there are main risks on the stock market. Be very careful and diversify your portfolio on the way that you're focusing also on hedges such as essentials and non-cyclicals, because cyclicals are very dangerous right now, even the big ones. So moving forward, the crypto market is actually developing, but at the same time is showing us some signals. Now, there is no change in the macroeconomic field. It's still affecting negatively the crypto market, but this effect is going to the background nowadays. So it's remaining on 14 points. The geopolitics are very positive. It's remaining on 4 points. Corporate earnings has no effect on the crypto market, but the market news and events is increasing from 6 to 8 points, because we just continuously getting these good news riding on the Bitcoin hype and the Bitcoin ETF hype. The industry is trying to bending everything around it and is working hard to keep that up for a longer time. However, the market sentiment is unfortunately declining from 15 to 14. Now, it's still remaining very positive before you start, start being afraid. It is very positive, but it's really showing a slowdown in the sentiment, and this could be somehow a warning signal. And let me just show you why this is actually happening. The only reason to check that sentiment is really, not here, but technically in the technicals with our special volume indicator, which shows us on a decrease in the measurement of how high the volume can go from week by week on the cycles. And while we made a new high again, and the volume just become higher this week, we also experiencing some drop back in the momentum of how aggressive the volume is going high. So this is the reason why the point is declining with 1, but it still remains in a very positive environment. So it doesn't really show us that it's ready to, or it's set up for a drop back or any kind of correction. It's just showing that this positivity on the market is getting to slow down a little bit. And most of the crypto charts are showing us that they are hitting a very, very strong wall. Whether this wall is a resistance or a no-go zone, as we call it, they are hitting it and they get rejections. Not very bad rejections, but the price is usually rejected by the zones. I'm going to show you a couple of charts today so you will understand that. So the point is decreasing from 5 to 4. Interestingly, so the overall point is remaining at positive 16, which again trying to suggest that there is a slowdown expected on the crypto market, and we need to be ready for that. So whoever is a kind of trader that it says that I'm going to buy anything and I'm going to hold, but I'm watching the 1 minute chart because it's important for me, I just so you know, for those people, that you could be very scary when the market is slowing down on the daily chart, it could be a complete crash on the 1 minute chart. And if you really don't expect that, it could, freak you out. While, my students are, let's say, much more clever on the way that they acknowledge they need to choose a time frame, and the mindset needs to be set to these time frames. So understand the market is very important. If you want to learn about that, you're welcome. Join to the challenge, and we can show you how to understand the market better. So a little slowdown is expected, but remaining bullish. The direction is still very stable. Technicals could cause some kind of surprise on the market because of the zone I just mentioned. And the main risk on the crypto market is right now the possible profit taking, mainly due to the Bitcoin as it's hitting its previous all-time high. And it is highly expected that some of the profit taking is going to take place on those levels. So these are the fundamentals around the market. What is driving the market right now? What we do expect from the market in the next 2 to 3 days. And now for the pro members, let's just talking about the technicals a little bit, because there was so much requirement of charts, and I want to make sure that you're gonna hear all of them. So whoever is not interested in the technicals, I wish you guys a very good afternoon, and whoever is staying with us, let's just change my screen for you.